got our own currency here. It's called the Naira, but Bitcoin was the one making the headlines in the last couple of weeks and months. So as we said, starting the program, Bitcoin on the CME group, that where it debuted about 24 hours ago, was around 19,485. This is moving almost every minute. This is now 385 points to the north. That's for the Bitcoin that will note to be delivered January 2018. We've seen a little bit of a sluggish movement there, about 147 was this the volume of notes that we'll see there. So far, we've seen this Bitcoin opening at around 19,725 high this morning. That's about 3 a.m. in Chicago, and around a low of about 19,135, a high of 19,725, and a low of 19,115. But the currency play for Nigeria here in 2017 was about the I&E window. On Broad Street, in the economy, home and abroad, the entire conversation about Nigeria was about the currency market. In particular, what was called, quote-unquote, the gamble by Godwin Emefiele's central bank when they floated the new investors and exporters window in the third week of April. So let's get currency into the market power play that we expect in the year 2018. Joining us for this currency conversation is Wale Okunriboye, who is a fixed income and currency research analyst at Ecobank, Nigeria. Good morning. It's good to have you.
Good morning. Thank you.
Currency, it looks like 2017 is all about currency and our lives, the story of our lives.
Yeah.
2017 is all about currencies. So folks says the stock market was good because of currency, because of the FX. Fixed income was good because of FX. Well, the FX also helped stimulate the economy one way or the other. Even though folks on the street will say, I haven't seen that yet. So we cannot discount currencies from the entire economic market story for this year winding up.
Yeah, I think the key thing to note is that really is that shift in the current account, in that external balance picture for Nigeria coming into this year. So from the tail end of last year, we had seen a recovery in crude oil prices. Production had also started to show fleeting signs of a recovery. And so Nigeria's current account went into a surplus for the first time in about 8 quarters in Q4 2016. So coming to this year, the central bank had that fundamental, so the ground had basically shifted into a positive phase for Nigeria, more or less. And so armed with that, and then of course, central bank was a bit inventive. They began to do a bit of FX swap inflows. And then of course, as the oil inflows began to improve, they became more relaxed about allowing some form of flexibility into the market. And so that came in with the introduction of the I&E window in April. And so once that came on board, I think the central bank bettered that look. Foreign investors would look at the fact that, look, fundamentally, Nigeria's story had changed given the improvement in oil prices. And that bet that
was a gamble.
Yeah.
That was a gamble by Godwin Emefiele and his team.
Yeah, and he played out because, as I said, fundamentally, people began seeing oil prices. I mean, oil prices started moving towards, we're now talking 60. Nobody saw, 70 now looks not too far away from where we were a year ago. So I think that change in Nigeria, the Naira is always going to revolve around stories around oil. And so once investors begin to see that improvement in oil, globally, oil currencies, you began to see people start looking back at oil economies again. The growth picture began to turn around. So naturally, you're going to find a lot more foreign investment. And if you look at FPI flow data that has come through, you've generally seen that recovery in inflows. And given that, and also the fact that, look, reserves have also picked up. So the central bank is now in a more comfortable position to intervene across more segments of the market. I think what you've seen is...
When the central bank under Godwin Emefiele started, it was all, well, this is a gamble. They don't have, the central bank does not have the deep pocket to execute this, to see this through. But it looks like this gamble, as it were, and I keep calling it a gamble because I'm not too sure even if Godwin Emefiele then was really sure how this will play out in the end. He couldn't see the end of it. But at least he believed somehow that he should do something, and they did something. For those of you who are analysts watching the flow from 2016 into 2017, what's your take on that?
So again, I think I would always go back to the hack back on that fundamentals. The fundamentals had, so the underpinning behind all of this, if you had floated, if you had done that flexibility and Nigeria was still in a deficit picture, the Naira would have actually weakened in line with the fundamentals. So what had shifted was just that, look, we were now receiving more dollars than we were shedding dollars, which is the fundamental shift. So that's the underlying shift. And so once that turned, you get things now had to, the only direction was that what Naira would have to actually reflect those gains in the fundamental picture. And I think that's what we've seen. So the parallel market, you've seen it come down from 520 to about 363. And even the I&E window, it opened at about 383 when they started, and it's also appreciated as well to 360. So again, is that fundamental shift. So people are now feeling that, look, the crisis which we went into in 2014 is starting to ease, and so because of that, I'm now more confident. And important is also as well is that if you look at the Naira, it's weakened, I mean, from 2014 levels, it's dropped almost in half. And if you look at, all prices have dropped almost in half as well. So you could say that the Naira has more or less reflected that drop in our oil or our oil inflow picture. And so it had been priced in more or less. So from these levels, people, and then finally once you start to see a recovery, people just start to say, look, the Nigerian assets appear cheap. For most foreign investors, that's a comment you constantly hear, that, look, Nigerian assets appear cheap. I mean, the stock market is currently trading on a P of 10 times. You get yields were quite high as well. So generally, you generally found a bit more. And because you had that flexibility, so as a foreign investor, there was an avenue for you to enter and exit. That meant you're going to see a recovery in inflow. So I think the introduction of flexibility has done what a lot of people were clamoring about. That, look, let's introduce a bit more flexibility.
Perhaps you professionals were the one asking for flexibility.
Yeah.
The man on the street was looking for 150, 190.
We need oil prices to go back to where they were for us to start having that conversation about that. About we need oil prices
150, 190.
Yeah, oil prices to go back to $100 a barrel. I mean, but those levels seem so far away now. I mean, so.
If you look at where we are today, would you say around 360 is a little bit the realistic Naira dollar exchange rate?
Well, our views is that, look, fundamentally, given where oil prices are going, so over the next 6 months, if you look at crude oil markets, generally they are starting to show increased signs of tightness. So that's because OPEC has done a bit of rebalancing as well. So if you look at the forward curve, the backwardation on the forward curve of crude oil prices is at 3-year highs. So that means generally you're going to see a lot more hedge funds going net long. Or if you look at net long positions on oil, they're also higher as well. And so what that suggests is that, look, there's more momentum for oil prices over the next 6 months on the upside. Production for Nigeria, I mean, it's been fairly stable at it's come back up to the 2 million barrels per day. We've sort of hovered that. So we think that's going to be stable over the next 6 months as well. So that will generally remain supportive. And you've seen reserve levels also come up following